Welcome back, traders. In this video we discuss about how to identify liquidity zone, and then at the end of this video I believe you'll be able to spot out liquidity in the market, know how to trade it, and also how to avoid some trade that might lead to unnecessary losses. So sit back, let's get into the video right now. So we have two types of liquidity in the market, which are buy stop liquidity and also sell stop liquidity. So let me show you guys the diagram. So right here we have sell stop liquidity, and then right here we have buy stop liquidity. So let me put a division line. So every single time price going on a bullish trend, it's going to like to be creating some lows, you understand? So every single low that price is creating, the higher lows are what sell stop liquidity. If price wants to change direction, price is going to like to take all this particular low, but it's not every single time that price is going to like end up taking this last low, but price is eventually going to take all these lows, then after that take this low and also this low, but it's not every single time that price is going to like to take this last low. So the reason is just because if price is going on a bullish direction on higher time frame, you are not expecting price to come all the way down to take the last low. You are just expecting price to take the last liquidity and then change direction and start going on a bullish trend to go above this particular high where the movement starts coming down. So that is just for that. So if you see this diagram also here, we have like equal lows. Sometimes can be 3 lows, 4 lows, or 5 lows. It all depends. So every single time you see something like this occur in the market, price is going to like to come all the way down to go below this particular equal lows and then start going on a bullish trend back. So that's just for that. So this buy stop liquidity, it's also like vice versa for sell stop liquidity. Consider price is going on a bearish direction, and then every single time price is going on a bearish direction, every single lower high, consider the price end up forming one lower high, and then we have lower low, then lower high, lower low, lower high, then lower low, lower high, then lower low. Every single lower high is what a liquidity, you understand? If price wants to change direction and start going on a bullish trend, price is going to like to take all this liquidity out of the market. Price is going to do something like this, tap out this liquidity and then carry trace a little bit, then tap out the second one and then retrace a little bit, then tap out the third one. So it's not every single time that price is going to like to tap out the last one. It all depends on what higher time frame is saying. So for example, if the higher time frame bias is going on a bearish direction, you're not expecting price to go above this particular high. So price is going to come to this area and then tap out the last liquidity here and find a strong order block to use it to pull down, you understand, to go on a bearish direction. So price is going this means that price is going on a bearish direction on higher time frame. So you have to know what higher time frame is saying if you want to trade liquidity, you understand? So that's just for that. And also if you check here, we have what a buy stop liquidity. Sometimes it's possible for you to see like double top, triple top, a price respecting a particular level 1, 2, 3, 4, 5 times, you understand? So price can end up doing something like this and then tap out all the liquidity in this area and then change direction at the same time, or keep on going on a bullish direction. It all depends, but this is what a buy stop liquidity. So you might be wondering that what is a liquidity himself. So a liquidity is defined by stop losses. Where the stop losses exist, that is where liquidity also exists. Smart money needs to activate the stop losses of existing order in the market so that they can place their position in the market. The reason is because the forex market is a zero-sum game, which means for a trader or institution to buy or sell a currency pair, there must be another trader or institution with an opposite position. So liquidity is the existing facility to place this position in the market. It's so simple. It's just like if you want to buy something, someone must be willing to sell, and then if you want to sell something, someone must be willing to buy. So that is just what liquidity is all about. So let us go to our chart right now, then let me show you guys on chart how to identify what's liquidity in the market. So right here you can see that price is going on a bullish direction, forming higher high and then higher low. You can see that price is going forming higher high then higher low. We have another higher high here, we have another higher low, then we have another higher high, then higher low, then higher high, higher low, then higher high, higher low, then another higher high, and also higher low here. So we'll be expecting price to break structure. So once price breaks structure, price is going to like to take out all this liquidity, all this stuff from the market. So let me just delete this. So the first thing you have to notice when you want to trade is sell stop liquidity. Every single low that price was respecting when it's going on a bullish direction. So let's just mark out all the lows out. You can see we have one low here, then we have another one here, then we have another low here. So all this low right now is going to become what liquidity once price end up breaking its structure. So we have another low here, and also we have another low here. So I said something earlier that it's not every single last low that price is going to end up taking. So let's just analyze the market to know the exact low that price is going to end up taking, and then the one that's not going to take. So if you check this particular high here, can you see what end up breaking this particular high is this particular order block here, this particular low, can you see? And then this particular low, it's end up breaking only one high. It's end up breaking only one high. Let's see, maybe is the one that broke this particular high here. This particular bullish candle. So it's not the moment that end up breaking this particular bullish candle. So we'll be sure that price is going to go below this particular low, and then price is going to respect this zone right here. So we are going to delete this, and then we'll not be expecting price to respect this particular area. So let me delete this also. And also for retail trader, this is what they do in the markets. Most of the time they'll end up trading a trend line that price is going to like to keep on respecting, and then all this trend line, there are lots of funds resting below it, you understand? So right now we have what a lot of funds are resting below this place, and then institutional traders, smart money traders needs to activate all these stop losses in the market. So all this area we have a lot of funds resting here, and then this low we have a lot of funds resting here. So let me add another one. So we have a lot of funds resting here. So a lot of monies are resting under this particular area. So smart money needs to activate all these losses. They have to like to take out all this fund that is resting below this particular place, because some traders are entering and then setting their stop loss below these areas, you understand? So that's just for that. So let me just delete all this, and then let's play the market to see when price breaks structure, what actually happened. Let me delete this also. So you can see that price end up coming all the way down, break structure, and then this is strong order block. It's end up breaking too low, so price going all the way bearish right now. So you can see that price going was on a bearish direction right now, and then you can see that price end up taking this last low here. So let me just pause the market. So right now you can see that price has taken every single set stop liquidity, you understand? So let's just wait, maybe we are going to see a buy stop liquidity, and then let's delete all this. Let me delete all this. So every single time you see this happening in the markets, it's advisable for you to like to mark out every single low, and then that price is eventually going to break. So if you want to enter into your trade, you can also set what your take profits using the last low that price is going to break, you understand, the last liquidity in the market. So right now you can see that price end up taking the last liquidity in the market. So we'll be expecting price to respect this particular order block, okay? This particular order block, because this is a strong order block. So right now we're going to mark out all the highs that price was respecting when price was coming all the way bearish. So let's mark this high out. So you can see this high here, and then you can see another high here, then we have another high here. So price is going to like to tap out all this particular high, you understand, if price is going what's on a bullish direction. So see this high. So I said something earlier that it's not every single time that price is going to tap out the last high. So let's just check if price is going what's on the bullish direction or on higher time frame. You can see that price is going what's on the bullish direction for me, what this higher low, then higher high, then higher low, then another higher high, then another higher low, then another higher high. So we're expecting price to go above this particular high. So you can enter into this trade and then settle what your take profit using this particular high, because to be sure that price is going to like to go above this particular high because of all these buy stop liquidity that is resting above here. So right now let me just play the market out and then see what actually happened. So we see we have what in breakout structure in the market, and the price going was towards our direction. So okay, price come all the way down. Let's see the reason why price come all the way down here, and then price tap what our take profits. Can you see price tap out this particular high? Can you see price end up tapping this particular high and then keep on going what on a bullish direction? So let's see the reason why price have to come all the way down to this particular low. Let me just give you this as a bonus. So right now you can see that price, this particular moment, this particular bullish moment, it end up breaking this bearish bullish candle here, and then also this side, and also this particular high. So this high, from this low to this high, it not break anything. Can you see from this low to this high, it don't break anything? So this low is what a liquidity also. So we have what is set stop liquidity here. So we have another set stop liquidity here. So let me just delete all this line so you won't be confused. So right now we have what a set of liquidity here, because this particular movement from this low to this high did not break anything around this particular area. Let me just draw it out from this high then to this high. It did not break anything. Can you see? Price did not break anything. So this low is what is set stop liquidity. Price is going to like to tap it out and then respect the low below it. Can you see? Price is going to respect this particular low. This particular other block, I mean, sorry, my bad. Let me delete this. So that's the reason why price have to come all the way down to tap into this particular other block and then start going what's on a bullish direction. It end up taking this set stop liquidity, and also we have another set stop liquidity here. So let me show you guys this. We have another set stop liquidity here. So the price end up breaking any particular high. So price end up breaking this only high. So is this particular movement that end up breaking only this particular high here? This high. PSA is one that is stressful for this. It's only break one particular high. So this other block is not what is strong other block. So that's just for that. So let me just delete this and then move on to the second one, which are double top, double bottom, and triple top, and then triple bottom. So let me just delete all this. So if you check these particular areas, what some retail traders do is just like they're going to like to be drawing a trend line. The price is respecting this particular low. Let me change this color to black. The price is respecting this particular low. Can you see that immediately this we have triple bottom here, and then price end up going below it, because there are lots of fund that is resting below this particular area, because some retail traders set what the stop loss in this particular area, you understand. So price have to go below it, you understand. And then this particular high we have like double top here. Can you see that price end up going above it, because some traders set what the stop loss in this particular area. So if you're using a support or resistance, you're just setting your entry where there's liquidity, you understand. So as an institutional trader, it's not advisable to set our stop loss or trading using support or resistance. So we don't use that. Every single time we notice support or resistance in the market, we go below those particular support level, or those particular resistance level, we go above it. So that's just for that. You can see that price end up pretty what a lot of support or resistance. And you see all this low here. That's why price out to come all the way down with full speed. Can you see? With full force, just like to take out all this particular liquidity and then all the money resting here. So if you check this particular eye also out, we have like double top. So we have buy stop liquidity here. Can you see that price end up going with a full force also, just like to take them out of the market. So if you check here also, we have like support level. So we have support level here. So every single time you are seeing all this occurring in the market, just be expecting what is strong movements that's going to like to take all those money out of the market. So anywhere that they are setting their stop loss, price is going to like to kick them out of the market. So they have to lose their money just because their trading was support or resistance. So I don't advise people trading support or resistance, because bank doesn't recognize those strategy. How can you just draw a line from any angle or from any point and then be expecting price to respect it? No, bank doesn't do that. So every single time you are trading, every single time you notice this support and resistance area, just know that price is going to go below and above this the particular area. So right now we have what's another support, resistance. So we have another resistance area here. Can you see? Price respected the first time, second time, the third time, price end up taking it out with a full speed. Can you see? With full force. So every single time we have support and resistance area in the market, price is going to like to take them out of the market, because funds are resting below it. They're just like a trader that doesn't understand the reason why price is doing what it's doing, the reason why price is going up, the reason why price is coming down. They just believe on trend line, using candle pattern, using support or resistance, because bank doesn't recognize all those stuff, like seriously. So right now you can see that price end up taking this particular low out, and then if you check this area also, you have double top. And so that price end up taking it out. Price not going to keep on respecting it. And also if you check it also, we have a lot of that in the market. So if you check this particular place also, you can see we have what a double top or a trend line where price is respecting. You can see that price end up taking it out with a full speed, you understand, and then a very big momentum up in the market, just like to take out all this particular high. And then if you check closely, we have a lot of them in the market. You have a lot of them in the market. So if you check here also, we have all this low here, all this particular low. Can you see we have what a full speed? a big momentum, they end up taking all this particular low out of the market because a lot of funds, a lot of liquidity are resting below this particular area. So if you check this particular area here, can you see price end up respecting this particular high the first time, respecting the second time? Can you see what happened the third time? So at the third time, you can see the price end up taking out all the high, you understand, because liquidity is resting there, funds are resting there. So as an institutional trader, you must know how to spot out all this particular liquidity zone, like this particular high, this high, and this high. Once you see this in the market, find what a particular order blow that is going to end up taking this particular high out. So if you check the markets here, can you see this particular high? This particular movement from this low end up breaking this particular high, this high. Can you see it end up breaking to high? This high, and this high, it end up breaking it. So this order block is what a strong order block. Can end up using the body of the candle, then add the wick to it. So you can see that price come all the way down to respect it, and they start going what on a bullish trend to take out retail trader out of the market. So as an institutional trader, you must know where retail trader are setting their entry. You must know where retail trader are setting what their stop loss. So we always go against retail trader, you understand, because they don't understand the reason why price is acting. They just believe on what trade line, they believe on support or resistance and those on. So that is just for that. So if you check markets very well, we're going to see a lot of example like that in the market. If we check here, can you see price end up creating triple top like 3 times to respect this particular area, first time, second time, then third time. Can you see they'll be expecting price to respect it and then come all the way bearish, but price end up doing what opposite. If they set their stop loss in this area, price goes to like to kick them out of the market, and then sometimes they can end up deleting their stop loss, and at the end of the day they end up blowing up their account. So that is just it. So that is how it's easy for them to blow accounts almost every single time. So if you shade the markets very well, you can see this particular area also we have what support level. So you can see price was respecting all this particular low. What happened here? There was an impulse movement that end up taking all this low out. So if you check this area also, we have what a resistance area. Can you see we have a resistance area, and then can you see that we have what an impulse movement that end up taking all this particular high out of the market. Then also likewise for this particular area, we have what an impulse movement. Every single time you are able to like to spot out liquidity in the market, what end up taking those liquidity out of the market is what an impulse movement, you understand. So an institutional trader, smart money traders needs to know how to spot out all this particular liquidity out. So once you're able to like to find them out, you can find an entry that's going to like to go against that particular movement. Then if you check here, if you check this particular area, can you see we have price respect this particular area 1 2 3 4 times before price end up kicking it out. Can you see resistance? People trading support or resistance, they're going to like to set towards their entry and then their stop loss in this particular area. So I've mentioned that earlier, and then price goes like to kick them out of the market because they don't understand the reason why price is moving. So as an institutional trader, you have to like to know when institutional traders is about to take out all this particular high. If we share this particular area here very well, you can see that price eventually come to respect other block here. Can you see what break this one is this particular low? This one is not a strong order block. Can you see this particular area? I mean, this particular high, what broke it is this particular order block, and then this particular movement did not break another high. Can you see the price going to respect the order block below it? So if you find what's using this particular order block, then you have trained what an institutional trader to enter into the market, and they start going what on a bullish direction. So that's just for that. You can see that we have what a very big momentum that happened in the market. So every single time all this happen in the market, all this happen in the market, price end up taking a lot of liquidity. You see price respecting a particular low or a particular high. After some time, price will end up taking it out, you understand. So we are just creating liquidity in the markets for retail traders to believe and then to use. So once they activate those liquidity or those area, they set their entry, they set their stop loss, and then they set their take profits, will go against them, you understand, just like to take their money out of the market. That's why it's easy for them to say I just blow up my accounts easily, because they don't understand how to trade as what as an institutional trader. So if you have any question about this, you can ask in the comment section. I will be willing to give you an answer. And then if you need further more assistance on anything, you can message me. I'm going to drop my contact in the description. So if you find this video interesting, like this video or subscribe. See you in my next video.